right, good morning. I'm here to do, um, let me make sure this is all working. I'm here to do Amazon AMZY. So I've been asked and bugged about it for a while, so I'm going to jump in here. This is my starting point for July. I go right after ex-dividend date. So let's jump in and show what's happening. Whoops. Oh, yeah. All right. So on 7/8, we went from 200 down to 199.29 on Amazon, the underlying down 0.36. And ironically, we did the same thing in AMZY from 22.12 to 22.04. So that's good. So what had been going on, let me catch you up over the 7/5 and 7/8 days and give you both since I'm just starting the fund and I had to plug all these numbers in, and it takes quite a bit of work to set this thing up initially. That's really why starting a new one, ongoing is work, especially when you roll over a month. You got to transfer everything and close out one and open another. But anyway, I won't bore you with the accounting side of it. But that does give us visibility whether the fund's making money or losing money. But in Jay's recent interview with Retirement on Dividends, he did talk about paying a certain amount sort of regardless. I really kind of look for this October timeframe so we can get a feel if in fact we're getting a return of capital, because as you guys may know, the return of capital, you don't get taxed on it. So it has to do with as you approach the end of the fiscal year, which I believe most of these funds have a fiscal year of October. So they look through their records and they say, okay, do we have a loss from the year before? Did we have this situation? If we paid out 90%, because if we haven't, we'll be taxed and we don't want to be taxed. So then they'll pay it out. And it's typically those late payments like that. They reclassify them underneath the YieldMax website as ROC, right? Return of capital. And sometimes it's a portion of a payment. So look carefully underneath the fund and look under tax info. Again, I think Tesla's had some of that. The only funds that have had that in the past would have been funds that started prior to October and had their first payout in October of 23. Okay, just for a guideline to see what they look like under YieldMax. I looked months ago and I haven't anymore. So I understood the concept. And again, if it's ROC, return of capital, you use that against anything where you bought the fund and hold the fund, because when you ultimately sell it, it lowers the price that you bought it for by the money that they paid you, as opposed to these normal distributions on a monthly basis. They go in ordinary income. All right, guys. So knowing that they put on this, it went down this much. So let's go over all these trades. So on Monday, they sold an additional 150 contracts at $1.08 at 202.5, right? The strike price, and break even's 203. So they collected 16,200 in the piggy bank. They also added 225,000 shares. So again, I'm only tracking all this stuff back here is last month's, right? So from ex-dividend forward is what all I'm tracking, these last three rows, which are two entries on 7/5, 7/4, there was no activity, and on 7/8, there was activity. So we can go look at the synthetic. Now, they owned synthetics going back, right? But so the total volume on that, I think, is 8,115. but I want to track when they sell new ones so I can count the money going forward. So we put on 150 on 7/8, and that actually they're very close to the 200 strike price. So they paid 139 to buy the calls, and they collected 137 when they sold the puts. So that was a negative 2,100, very small amount of money. And these 200 expire some 38 days out, right? August 16th. So we have our entry here for July. And then when I look at the weeklies, you can see that we have for this week 8,115 at the 205, which is 2.87 out of the money because we closed at 199.29, we being Amazon, down from 200. AMZY went down from 22.12 to 204. I did update this, guys. This can be useful. When you're looking at these 52-week highs and lows, it tells you, even on implied volatility, it's 38.64. So in the last year, it's been almost 50% and has been as low as 22. This is particularly useful. It gives you some idea. Now, you look at a MISTI and you'll see 19, I think, and 39.50, right? It may have even hit 40. It may have hit 41. So you see, $20 to $40 on Misty, and Coney has gone 18, 17 to 30 twice. And recently it may have even, yeah, I don't know if it's gotten below 17 on Coney. But when you see a range like this is a pretty steady. Look at this chart. I did upload a chart from today. So, I could draw some parallels and you could see the channel. I mean, this is just an amazing stock. It just chugs along. It's almost monopoly, almost a monopoly in a lot of ways. But it's a fabulous stock. And then I've mentioned to people before what I really like about it in the next couple of quarters is they started the free cash flow and they're now well tuned into all the ads that run on the retail website for all your online shopping. I mean, they had a small amount of ads, but they've really upped the ads. So over the next few quarters, they should have some real incremental revenue that in the free cash flow category that they didn't really have. And the other side did most people, if you're not in IT or in a high tech environment for many years, I worked in a lot of different applications, hardware, software, different communications. So Amazon is basically the old mainframe days in the clouds. It's the big data centers living in the cloud for cloud computing. So nobody goes and builds these, I shouldn't say nobody, most corporations no longer build their own large data centers. Instead, they utilize Microsoft Azure, they use, Google Cloud, they use Oracle Cloud, and the biggest of all is Amazon. A lot of people don't even know that if you're not in tech. And I have several friends that moved into Amazon, have been there 5 years, 8 years. So, when I retired, a lot of people had one or two jobs after the company we all work for. And then a lot of them are at Amazon now because it pays well and it's a great company. So that being said, that's what its forte is. I just wanted to make sure you didn't think of it only as a retail guy, right? There's the whole infrastructure data center, and they've moved a lot to Microsoft. And Microsoft has moved a lot to NVIDIA's competitor AMD because literally NVIDIA's demand for product is so great that in some of their high-end products they have a 9-month delivery backlog. So Microsoft's kind of committed. Amazon is still buying NVIDIA in some parts, but they're also sort of building up their own clusters and some of that. So kind of interesting the different ways that people go about getting solutions. But I wanted to tell you that this is a pretty solid company, but without high IV. And if you listen to that recent interview with Jay, he talked about, the question was, why is YMAX and YMAG and why are the dividends, sliding down? And he said, listen, guys, volatility in the markets has slid down. If you don't, when you have a lower IV, it's hard to generate that cash by selling the calls out. And that's just simply a fact. So it was good to hear. I mean, I could see it, but it's good when Jay, who's really running the options team, those guys see it every day. So it really validates kind of what we're seeing. All right, let me jump in and just give you the real gusto of this. So let's take a look at holdings. Similar, I did this similarly to my other layouts, but I want to probably get this whole process down to like 2 sheets and just go boom, boom, boom and make it as graphically as I can so you can see everything. Because you guys, in reality, this is all important to have collateral and have the cash, but nobody really cares what treasury it's in and whether it's in First American, government. And so these just become vehicles to store cash and collect 4 or 5% interest. And, sometimes it's important whether cash is positive or negative and whether people bought in the fund because they put on more trades. But for the most part, people don't care. Okay, so on the synthetic, it's nice to see after dealing with all the BTCs, the synthetic is ahead of the game. Way to go, Amazon. So they just turned positive, right? They were 791,000 under, a million under, and now they're 448 positive. And on their weeklies, this works just like everybody else. They have a 205 call. They've got 8,115 that they put on last Friday. And we've captured 43% because they sold them for like $1.07. They sold the bulk of them for $1.17, and then they sold a small batch for 103. So the bulk were sold at 117. Sweet. So that time decay will take care of stuff there. We just don't want them to blow past 205. But so here's the share count, right? 225,000 shares bought in, represented 3%. They've collected 42.11 so far. This one that was just written, they're a little bit past that. That was just written today, right? So what did they write that at? In July, they wrote that at 108. So yeah, that one's 121. No big deal. All right, so you're familiar with the flow. Let's jump into the payouts and see what we got. All right, so this is a 2,100 loss. Okay, peanuts, right? It doesn't even measure as a penny on the 7,250,000 shares. But all those calls that we wrote right here, 963,000, we've captured 42%. We could buy it all back, right? For much less than what we've already received. That gives us 13 cents in the short call income and less than a penny that we've lost over here. So we've got 13 cents. Now remember, these guys paid 76.50, right here. So I left something in there so I can work through the process. So all you guys screaming about AMZY, I'm on it. I skip a day occasionally, but in general, I'll do daily updates. Okay, I got more to do. That's what I got for you. Thanks. Please like and subscribe, especially you guys that, if you're watching it and you're not subscribed, but you asked me to do AMZY, I know there are a few of you. Make sure you subscribe and tell your friends. Okay, sounds great. Thank you. Bruce out. Again, not financial advice. I'm not a financial advisor. Bye for now.